Hey everyone, and welcome to the first episode of our new series called Funded Fridays, where every couple of weeks the top originators and closers at our company, HMO Investments, will get together at this small round table and talk about the deals that we recently closed in the last couple of weeks, and in general, where the market's at. So we hope you find value out of this, and let's get it rolling. I'm here with CJ Barina. My name's Johnny Crossway. And CJ, you've been one of the top closers at our company in the last year. In the last couple of weeks to month, what kind of loans you've been seeing? Tell us about some of the loans that you've been funding.
Sure. I actually had an interesting one that I did the other month. And this one was, off the top of my head, it was about $380,000 on the purchase price, about $550 on the ARV. And I believe the rehab budget was around $100,000 to $80,000, give or take. It was a fire damaged property in LA, and so we took it to one of our funding partners. They were offering 90% on the purchase, 100% on the rehab, and we went through the entire process of underwriting, collecting all the docs. They made us get a feasibility study from an architect, I believe it was an architect, basically because of the fire damage. And so once that study came in, they actually, our funding partner, they took a look at it and they said, actually, we can't lend on this. We consider this a ground up, because they had to take down all the walls and just start from scratch.
So you submitted as a fix and flip, but because there was so much fire damage that they considered it a ground up and wouldn't do it.
Yep, exactly.
Got it. So what did you do?
So that was literally about 1 or 2 days before we were supposed to close, and everyone was on a deadline. The sellers, there was actually 15 sellers in a trust.
Oh my God.
And getting signatures for them to all extend, 15 of them, and they were extended multiple times before this. Not before they got, or it was before they got to me. They've extended for months. And so they finally got to me, and we were supposed to close on a Tuesday. And that Monday came, and the lender, they said, sorry, we can't fund on this. And so from that Monday afternoon, I took it to one of our other funding partners, and from Monday afternoon to Friday, we were able to close with a 5-day close. And so most lenders would consider that a ground up. I got our other funding partner able to use their experience, the borrower's experience, basically because he was a contractor. No ground up experience on title, but we used his contracting GC experience to get it funded. And we got him, I believe it was 80% on the purchase, 100% on the rehab. But we got the deal done for them, 5 days.
Nice work. Yeah, that's not easy. I mean, if borrowers were trying to do that on their own, they would most likely be screwed, right? But that's why it's important to have someone like you that has the right contacts. So when a challenge like that arises, you can make 1 phone call or 2 phone calls max and save the deal and get it done in 5 days.
Yep.
That's tough, man. Good work.
Yeah, thank you.
What else have you been funding? Any other interesting deals?
Recently I did one also in LA. This one was, what was the number? I have it here. It was a $735 on the purchase. And then this was, I believe, it was $100,000 on the rehab. But we actually were able to get them $135 because they needed to come in with more money on the down payment. So we got them $135, and this one was done in about 7 days. So it was pretty good. Lots of moving parts. There was wholesalers involved. They wanted to make their money. Lenders that were, they were a little slow on some parts, but they were able to pick it up and get that 7-day close done. But yeah, lots of moving parts, and we got it done. So it was a good one.
Nice. And are you mostly funding fix and flip, ground up? What type of loans are you mostly seeing right now?
I'm doing a lot of fix and flips and then refinances. I'm rarely seeing just a straight up purchase. I'm rarely seeing that. So it's usually half of them are refinances, half of them are fix and flips.
Got it. And any particular areas of the country that you're funding most of your deals in, or are they just all over the place?
I'm seeing a lot in California, Florida, Texas, Ohio. I think those are the main ones.
Cool.
Yeah. How about yourself? What are you seeing?
I've been doing mostly ground up construction, a little bit of fix and flip, a little bit of DSCR loans since rates just dropped and are now in the 6s for us. So it's been a mixed bag, but the last couple of months, mostly construction. I have a couple I could talk about. We work with a lot of builders that are not national builders, not necessarily regional builders, but there's mom and pop type builders with 5 to 10 employees that like to do a lot of volume, which is great because they're looking for financial partners that can help them streamline their funding. So one deal I funded was 2 single family homes ground up in Randleman, North Carolina. I had a borrower that's just building 2 lots side by side, same plans, same budget, next door to each other, $200K construction budget each. Very experienced builder, super easy to do. Got it done for him in 3 days. We funded 87% of the total project cost because he's very experienced and has good credit. And then we also actually gave him 6 months of interest reserves. So he's not making a payment out of pocket for at least the first 6 months.
Nice.
And then we also did something similar, another builder in North Carolina, a separate guy. He's building 4 single family homes, same plans, same budget, all side by side in a small subdivision. Guy's also very experienced, excellent credit. We funded 90% of his total project costs and 6 months of reserves and 100% of the construction costs. Wow. So, we love lending to builders like that are just trying to build 5, 10, 20 homes a year with similar builds, like starter homes. We can do the luxury that's just tougher in the market right now. I funded a $500K construction loan in Washington, another experienced builder. This was an acquisition though, so we financed 75% of the land purchase price. And then we funded, I think the total loan to cost was 88% of the total project cost, and then 3 months of reserves financed. As far as a more luxury build, we did finance a single family home here in LA in the hills for a builder that's building a nice single family residence. That was a loan of $988,000, and we financed 100% of construction. We actually gave him cash out at closing because he spent money on the land cash, and he built up to the foundation all cash. So we covered his closing costs and gave him cash back at closing based on what he spent to date so far, and funded the rest of his construction. So that was a really good deal.
Cool. What are you seeing nowadays with a lot of your borrowers? How do you think they got to that level, and what would you recommend to people that are flipping, that are trying to get into new construction? What kind of advice would you give them to get qualified and kind of get that going?
Yeah, it's a good question. So we do get a lot of requests from people that want to get construction loans, but they don't qualify because the main reason they can't qualify with us or with any lender is that you got to have at least 1 to 2 completed ground up construction projects under your name to qualify for a construction loan. So most borrowers ask, well, if I don't have one, how do I get started, right? And either you have to have a ton of heavy fix and flip experience. And what I mean by heavy experience is, gut rehabs, moving walls, adding square footage, adding floors, stuff like that. So you have to have a ton of heavy renovation experience, or find a partner who does have ground up construction experience. You bring them on for your first deal, and then on future deals, you don't need that partner ever again. Those are pretty much the only ways. Or you do your first ground up build all cash. Those are really the only 3 options that you have to get qualified if you don't have experience.
Yeah, makes sense.
Yeah.
Yeah, I had a borrower that did, they're doing ground up mid-construction. So they're paying for the ground up with all cash, putting up the walls, putting up the roof. And then once they're at that point, then they refinance with a lender and get that cash out and get the rest of their rehab paid for.
Got it.
Yeah.
That's interesting.
Yeah.
Yeah, I've been doing some stabilized bridge loans lately where builders, brand new construction, they just need more time to sell because it's not selling as quick as they want. And the construction loan's coming due. So we just give them like a 12-month bridge loan, which is basically 70% of the appraisal value. Doesn't need to have a tenant in place or nothing because it's just 12 months interest only. Those are really easy to do. And it's nice for builders because it buys them, 12 months instead of just getting 3 months on a short-term extension. Mm-hmm. So I've been doing some of those lately as well. Other than that, we just started doing some DSCR loans. As you know, rates have dropped. They're in the 6s right now.
Yep.
It's, end of August at the time of this filming. So we'll see if rates continue to drop or, what do you think rates are going to do?
You saw a 5, didn't you?
I did see a 5, but it's lower LTV, so it was like 60% loan to value.
Yeah.
Most borrowers obviously want max leverage. They want 80% of purchase price, 75% cash out, which we can do both of those. It's obviously just a higher rate, right? So I did get a deal, 80% of purchase price for a borrower on a DSCR purchase at 6.8%.
Oh.
And they had great credit. So obviously if it's high leverage and you have lower credit, the rates can be a little bit higher. But for good borrowers with good credit, you can get rates in the 6s and high leverage.
Yeah. Yeah, I'm seeing a couple weeks ago when they had that Japan carry trade market crash.
Yeah.
That entire week, a bunch of lenders, they were contacting us saying, hey, our rates have dropped. And like they were dramatic. I was seeing 8s and 9s. Then it came down to like low 6s, low 7s.
Yeah.
And that was definitely a game changer. I'd probably also say for people that are doing, if you've shopped around for DSCR rates in the last few weeks and the numbers didn't come back to what you wanted it to, probably check again, because once those rates drop, it helps your DSCR ratio, and then it could possibly help get the deal done at a lower rate.
Yeah, and how does explain to everyone who's not familiar, why does lowering the rates, help with your DSCR ratio?
Because your DSCR ratio is basically your rents divided by your principal, insurance, taxes, association fees, and am I missing anything there?
Principal, interest, taxes, insurance, association fees.
Yeah,
That's it. Yeah.
So, based on that ratio, the higher your mortgage, the lower your ratio is going to be. So the lower your rate, the higher ratio you get, which means you get better terms and a lower rate.
And a higher loan amount.
And a higher loan amount, yep.
Right, because with DSCR loans, for those of you guys that don't know, it's not about your personal income, it's not about your DTI, like if you go to a traditional bank. All that matters is that the rental income, covers the expenses of the property. So the higher the DSCR ratio, the better the rate, and the higher the loan amount you can go.
Yep, definitely.
Because most lenders have a minimum requirement. What's like the typical requirement you're seeing out there right now as far as a minimum ratio to qualify?
Well, I'm seeing some lenders that are, above 0.8, but
higher rates.
Yeah, higher rates. Some people are going, 0.8, but then they're offering different options, like an interest-only option, which to some people that could make sense if it's a temporary loan for them and they're just trying to kind of weather the storm until, prices appreciate and they could refinance later, or sometimes they're just trying to get that cash out to buy the next property, and then, hopefully they figure it out within a year or two, you know what I mean?
Yeah, I know what you mean.
Yeah.
So you've been doing this for a couple of years now with us. You started off really strong and you've been getting better and better each month as time goes by. You're closing more deals, you're closing more volume. Is there any advice you would give to other, loan officers out there, or mortgage brokers, or people trying to get started in the private lending space? What advice would you give them to be successful?
I'd probably say know your lenders, know your programs, know what you could offer people, and then just have more conversations at the end of the day. The more conversations you have, the more deals you're going to close. Absolutely.
Well, we appreciate you guys tuning in to the first episode of Funded Fridays. My name is Johnny. This is CJ. We'll be coming back to you guys every couple weeks. We're also going to have more of our loan officers and closers here at the office, share their deals they've funded. So stay tuned, and feel free to drop some questions in the comments below of questions you want answered for the next show. If you enjoyed this video, make sure you like, subscribe, and share, and come by the office sometime. We're here in LA.